tells me we should be near the bottom because the NFT total velocity of money or value transacted is terrible right now, right? Because if you think of the number of active addresses versus total addresses in crypto, that's like down 65%. So different chains trade different values. So XRP has quite a lot of throughput, but it's super low value, much like layer 2s. Super low value, high throughput. What you find is Bitcoin has larger transaction sizes, so there's more activity that's worth more money that's happening amongst more people, right? That's how I think about it. So, it's got to be some sort of cleaned version of active wallets, whether you use the Masari one, whatever, whichever one. And I don't think there's a pure mathematical formula. We just multiply one number by the other. That chart is exactly the same as the charts of the underlying chains. So that's really interesting to me. The one that started deviating was actually Ethereum, and it was after 1559 came and the burn started happening. Suddenly it started trading at a premium because it's like a stock that's got a dividend as well. So there was an extra value to it, and we've seen that pretty consistently with others that have similar types of mechanisms. So velocity of money is helpful. It shows that there's vibrancy on chain, but you can game it. Really hard to gain, high values of transactions. And NFTs, what you're talking about, tells me we should be near the bottom because the NFT total velocity of money or value transacted is terrible right now, right? Because if you think of the number of active addresses versus total addresses in crypto, that's like down 65%. So we've got like 118 million Coinbase wallets and 9 million actives. And then in NFT land, it's another leg lower than that, right? So what you've got is something that's like 90% discount to where activity is now. So if you get an increase back in activity, again, we will see money flow through into this area. So for me, it feels like it's really cheap, and you always need some sort of crisis to cause it. And the blur farming crisis, I think, was the classic, plus a couple of fumbles by some of these NFT communities, Azuki and stuff. It's like, okay, this gets interesting because the blur farming had created just this ongoing selling from one market maker to another market maker to another market maker to another market maker. And everybody was going lower. Now, they all thought they were going to get compensated by the price of owning the Blur token. My guess is they've all got a massive loss, and that'll be the end of that game. That's good because this is the kind of final flush. And I joke with Ovi and Mando from Retguy. I'm like, you triggered this because the market, they dumped all of those apes into a market using that liquidity, and that triggered a liquidity cascade that has not stopped yet, still ongoing, because there's no actual buyers around right now because nobody's got any money. Everyone's skint. I think the Fed aren't stupid. They know all the forward-looking indicators. They know that growth is weak. They know that inflation, all the forward-looking indicators of inflation are falling. They know that rents are coming down. They know that unemployment is likely to rise. They know all of this. So then you've got to ask yourself, why are they so late? And my thesis is because they need inflation to undershoot. And the reason is because they need to get rates below trend rate of GDP, which is 1.75%, because they've got $6 trillion of interest payments to make, of bonds to roll plus new bonds to issue. All of that has historically ended up on the Fed balance sheet. So like the pandemic debt issuance was 3.5 years ago. That is coming up for rolling. And I've proven out in this work called the Everything Code that seems to always end up on the balance sheet of the central bank. And that's consistent with the US, the UK, the EU, Japan. Pretty much everywhere is doing the same thing. There was a global accord on interest rates, which is why we're so cyclical. It kind of matches the Bitcoin halving because everything got reset to zero in 2008, right? All rates were cut to zero. It's like a debt jubilee. So my view is the work that we do at Global Macro Investors suggests that the economy keeps slowing, inflation really starts undershooting in the last quarter of this year. So I think there is a probability that they cut this year, which the market doesn't believe yet. And I think strongly, we're going into an election year. We're going to see, if you remember, unemployment and inflation are really lagging indicators. So they lag by about 9 months, most of the business cycle, and some of these things lag 18 months. So we're going to see wage inflation falling out until the end of 2024. And so that's going to make it look like core inflation is super low, and the Fed have all the cover in the world to print as much money as they need going into an election. And look, I think the probability is that, but the question is does it matter? So think of the beach ball. You take your foot off the beach ball, that's rate rises stopping. It comes straight out of the water because it's a secular trend. The speed and magnitude of that trend Do we get a gust of air underneath the beach ball to lift it up into the sky? That's the rate cuts and mainly QE. Either way, it does fine. Now, if you go back to this hypothesis and look at 2019, similar thing, the Fed paused December 2018, Bitcoin was up 300% 6 months. The Nasdaq screamed higher. We had the same in 2011 when the Fed paused, everything screamed higher. So I think though you can't stop the trend, but you can accelerate it. Assets tend to lag by 12 to 18 months in any economy, just because it's wealth effect that gets recycled, right? So nobody's making any money yet. So what we've got is we are 15 months behind ETH making a low last year. So, okay, we're in the zone. So, you buying NFTs right now is exactly in the right zone. We can never time it perfectly. There's different assets. It's very complicated with NFTs, but generally speaking, have punks hit their low most likely? Was that the flush out? Is that the benchmark? Is that like Bitcoin or ETH hitting its low? Probably. So that's how I think about it. They're lagged. So then we need to go into the future 18 months and say, okay, the action's not really going to happen for a while. So it should come up a bit, and we've seen that with punks and some of these. They came up from the low, they'll probably stabilize for a while. If ETH rips higher, which I think there's a very high chance it does even into the year end, they won't participate. Obviously ETH goes up, so you participate anyway, but the ETH call option that NFTs have embedded in them. But the real action in NFTs is later in 2024 and 2025, particularly when everyone's made a bunch of money in their bags and Solana's gone up 20x and they're all feeling clever and they all want to buy Fidenzas. We've seen that was also the other interesting point, is we saw the generative high-end art market bottom and actually go up. And that's a signal as well. So that was flight to quality. So the flight to quality started to happen and we kind of rotate through the curve while kind of all of the less quality stuff has gone essentially to zero.